In today's video, I want to take a look at what I think might be in store for gold over the next month into the March FOMC meeting. I'm going to start off with the dollar, though, because I think that is going to control the gold cycle since they tend to move inversely. Um, so to begin with, this initially this looked like a daily cycle low to me in the dollar. We had a nice bounce. The problem was it never managed to break through this cycle downtrend line. So we never got that confirmation. And then we got another dip down. This intraday low went slightly below this one, and now we have bounced enough to finally break this cycle downtrend line. So as of right now, there's no confirmation this was a daily cycle low. There is confirmation that this is a daily cycle low. Now the question is whether the dollar starts, continues to rally. If it were to break this high, that would be a higher high. That would probably signal that this is a longer term, a larger degree, intermediate cycle bottom, not just a smaller daily cycle bottom. However, this has been a very weak bounce, and if this rolls over and makes a lower low, and instead of moving up and maybe topping on the FOMC meeting, perhaps instead the dollar breaks down and bottoms on the FOMC meeting, is a very real possibility. As we've seen over the last year and a half, 2 years, the tendency has been for the dollar to, the major dollar cycles to top on or very close to these rate hikes, and the Fed is going to hike rates at the March meeting. So the tendency has been to top and roll over on the rate hikes, but I think that's happened enough times now to where the market probably needs to throw everybody a curveball. So I'm going to go out on a limb and say that I think the odds are slightly better that the dollar rolls over right here, and instead of topping on the rate hike, we're going to bottom on the rate hike, and we're going to get a bounce, an intermediate degree bounce out of that FOMC meeting. Now, if the dollar just continues to rally next week and we go above this peak, then I would be wrong, and it would be more likely that we're going to get another top on the rate hike next month. And moving out to a much longer term chart, I want to show you why I think the odds are maybe a little bit better that this daily cycle in the dollar is going to break down, and we're going to get a bottom on the rate hike instead of a top. So I've shown this megaphone topping pattern numerous times. My expectation is that this bounce off of the lower trend line was going to truncate and then roll over, and we would break down out of that topping pattern. Many of the dollar bulls were expecting, a move up to test the upper trend line. That, of course, has not happened. You can see here, although the dollar doesn't adhere to this 100-week moving average really closely, you can see it does tend to act as support and resistance. Resistance here, support, support, support. We break below it, we get our 3.5-year cycle low, so it holds below it, finally breaks above it. You can see multiple tags of this level here as we put in the 3-year cycle low, and then when we finally break through it, the bounce off this lower trend line couldn't even come up to tag the 100-week moving average, which was a bad sign, a sign, in my opinion, that a new bear market had started in the dollar. And so my expectation is that it may just be a little bit too soon right here for this intermediate cycle to bottom. We're still a little too close to this megaphone trend line, and we're going to be due for an intermediate cycle bounce at some point. So my expectation is that we're going to come down and tag this trend line before the FOMC meeting in March, and that's where we'll get our intermediate cycle low, and then we'll probably get a bounce back up to this trend line as a counter trend move out of that larger intermediate degree bottom. So moving on to gold, I'm going to say, a little caution over the next week or two until we see how what the dollar is going to do. If the dollar does decide to roll over and move down to tag that trend line, then this intermediate cycle in gold probably is not done rallying yet, and I would say we're going to have a push up to at least test this baby bull high here. I think this was 1377. Maybe we get a slight push above it, but as you can see, there's just not a lot of potential here, and next week's going to be the 11th week of the rally, or of this intermediate cycle. So we're starting to get a bit mature. So there's probably not a great amount of profit potential at this point. We're just getting a little too late in the cycle. It's unlikely at this point that we're going to get a big breakout above this and a sustained move higher. In order for that to happen, we really needed to test and break through this zone by the 4th or 5th week, and like I said, we're already getting into the 11th week of the rally, so it's just getting a little too late for gold to really have a chance for a sustained breakout. We might get a marginal breakout if the dollar does roll over and tags that trend line. Let me widen the chart out just a little bit here. All right, so you can see this 100-week moving average has acted as a strong support and resistance for gold ever since the top back in 2011. This first major leg down, bottomed here, bounced, tried to hold it again. Once we broke through, started the bear market, tried to recover here, couldn't do it. Finally recovered it, bounced off of it here. Then the big election night reversal did send gold back through that moving average, but it has since popped back above it. And you can see it's acting as support here as gold completes this basing phase. And because this intermediate cycle is getting late, we're on week, like I said, we're going to be on week 11. I'm going to say we got another test of this 100-week moving average ahead of us. Whenever gold starts moving down into its next intermediate cycle low, whether we do, like I suspect, maybe have 1 or 2 more weeks up to test this baby bull high, maybe we make a marginal break above it, go to 1400. Either way, like I said, we're just getting too late in this intermediate cycle for there to really be much chance of a sustained breakout above this level. So I think we can expect gold is going to make another trip down to test this 100-week moving average again for the 5th time, and that will be your buying opportunity. And as I've kind of been expecting for the last year, this has just been a very slow kind of a U-shaped bottoming pattern that is in progress here. So it just doesn't look like gold is setting up for a big rocket launch type move back towards the highs. So I think just some patience. We may have some upside potential over the next 2 or 3 weeks. Doubt it's going to get much above this 1377 level, though. I think your real buying opportunity is going to come if you're patient when we're going to get another test of this 100-week moving average in the weeks ahead. Somewhere probably, and I would guess the intermediate cycle low is going to occur probably in May. So I think that's the point at which you're going to get a very low risk, high reward opportunity to get into the metals, and something that would have a chance to test this resistance zone here between 1370 and 1400 and do it early enough in the intermediate cycle to where we could get a sustained breakout that might take gold up to 1500 or 1550.